Can we still trust the jobs data? That's not a rhetorical question. It's the question now facing investors, economists, and even central bankers around the world. Because something just happened in the United States that's quietly shaking the foundation of global market confidence. The head of the Bureau of Labor Statistics, the agency responsible for counting jobs, measuring unemployment, and helping define economic reality, has been removed. And whether or not you agree with the decision, the consequences go far beyond one person. Because the moment we stop trusting the data, the entire system starts to wobble. Let's step back. What exactly does the BLS do? Every month, the Bureau of Labor Statistics publishes numbers that influence trillions of dollars in decisions. Non-farm payrolls, the single most watched monthly jobs number in the world. The unemployment rate, used to benchmark policy, benefits, and economic health. Wage growth, hours worked, labor force participation, all critical inputs for understanding inflation, consumer demand, and recession risk. Even the Consumer Price Index, or CPI, partially relies on labor-derived data. These reports shape how the Federal Reserve sets interest rates. They influence Social Security adjustments. They move stock markets, bond yields, and currency valuations globally. But none of that works without trust. If the data is perceived to be politicized, delayed, revised for the wrong reasons, or worse, manipulated, then the decisions built on it start to fail. And this time the trust may be breaking. In July, the U.S. jobs report came in far weaker than expected. Just 73,000 jobs were added. Not only was that the lowest number in nearly 2 years, previous months were revised downward by more than 250,000 jobs combined. Markets were stunned. The Federal Reserve's interest rate path was suddenly thrown into question. And then, something even more shocking happened. President Trump removed the BLS commissioner, Erica McIntyre. The reason? The White House accused her of producing biased, flawed, or politically motivated numbers. But here's the real problem. The BLS commissioner isn't supposed to be political at all. It's a 4-year fixed-term position, deliberately staggered from the presidential cycle to protect its independence. Historically, no modern president has interfered with the BLS, even in times of economic crisis. Not Nixon during the wage price shocks, not Obama during the Great Recession, not Bush during the dot-com collapse, until now. This may be the first time in modern history a U.S. president has removed the nation's chief labor statistician based on dissatisfaction with the results. And even if you believe the removal was justified, the perception of interference is already doing damage. Because markets don't just rely on data, they rely on belief. Belief that the data reflects reality. Belief that policy is based on facts. Belief that institutions act independently of political pressure. If global investors begin to question U.S. labor data, if central banks around the world begin to question whether the Federal Reserve itself is basing decisions on flawed or politically curated numbers, then we don't just lose one clean data point. We lose the entire anchor that guides monetary policy, portfolio allocation, and global economic modeling. This isn't just about one jobs report. This is about whether we can still trust the indicators that guide the most powerful economy on Earth, and, by extension, the global system that depends on the data. Because what happens when trust disappears? The Fed hesitates, markets misprice risk, capital pulls back, policy errors multiply, and eventually, we get a confidence shock. Not because of the data itself, but because no one believes it anymore. That's what this moment represents. A crack in credibility. And cracks, if ignored, tend to widen. Because the economy doesn't collapse when jobs slow or inflation rises. It collapses when belief in the system starts to break. And that's why this story matters. The strength of the U.S. economy has never just been about GDP growth or unemployment rates. It's been about trust. Trust that the numbers mean something. Trust that the institutions producing them are protected. Trust that the world's most important decisions are made on something stronger than spin. If we lose that, we lose far more than a data point. If you found this helpful, consider giving it a like. It helps more people find this kind of content. Let me know your thoughts in the comments. Do you still trust the data that moves markets? And if you want weekly breakdowns on macro stories that actually matter, subscribe to Global Notes by JP. No hype, no noise, just signals. Because when trust cracks, we follow it.